From the floor of the CME Group, this is Danny Riley with today's Cash Close. Wow, it's been a long week and we're only the hump day. Anyways, the name of this video is really more of a trading rule that MrTopStep has had for many, many years, ever since the old Merc at 30 South Wacker. It's called no stops go untouched in the S&P. The high of the day in the S&P came in at 1945 even mid-morning. The low came in at 1934 even early. And last, we're 1943 even. We're up 12.6 handles. Total volume, 1 million minis trade and 3,500 big S&Ps trade in the pit. MOC, we had 350 million to buy. The MIM started out small to buy and then gradually moved higher. And when I saw that, I came out into the chat room and said, I suspect that there's going to be a bigger number. It didn't end up all that big. Tomorrow we've got the jobless claim numbers, we've got the import-export prices, we've got the EIA Natural Gas Report, we've got the 5-year TIPS announcement, and we've got a 30-year bond auction, the Fed balance sheet and money supply. Now look, I'm fine with people. Some people may not think that I know what I'm talking about. They may say, you know what, MrTopStep has no clue. You know, big deal on his 37 years on the trading floor. Well, you know what? I'm fine with that. It doesn't bother me at all. But the reality of this is that I've been around gigantic order entry. Back at the old Merc, we used to do business for not BCCI, but an old Capcom account, which used to be the Royal Saudi family. We used to buy 3,000 and sell 3,000 big S&Ps on the open and closes. We were the largest desk on the floor of the CME Group in the S&P. I know all my competitors will say, wow, they were bigger. BS, no way. We had Tudor, Bacon, Kovner, Soros, Bank of America, Merrill Lynch, Goldman, AIG, SocGen, Nomura, you name it. We had them all in there, Citadel. And you know why? Because we work our butts off. We do our best to try to relay information to traders that will keep them out of trouble. Now today I got an email from somebody, and I want to talk about this real quick. There was resistance above the market in the S&P today, and everybody thought that we were going to range trade a little bit after we sold off. My call was if they open higher, sell the early rally and then buy the weakness. But at the end of the day, after the S&P started rallying, I could see that on the Twitter and in the chat room that people wanted to sell the rally up against certain levels, and just above there was a powder keg of buy stops. And then I started going on into the room. I went into the ICE chat and I started pounding on the Twitter. Buy stops, buy stops. You know, I put out so many little things that gave clues to traders that we were going to run those buy stops. I even said, look, you're not going to find this on CNBC. You're not going to find this on thestreet.com. You know what? This is real traders. This is what it's about. We're not writing things to write things. We're there. We're part of the action. We're part of the living part of the S&P. And you know what? At the end of the day, I've never claimed to have an MBA. You know, I don't have a PhD. A papa has dough. I'm a street guy. I work my butt off. I came from the school of hard knocks, and I've learned that following fair value, following premium levels, and gauging where the old highs and lows are. I've got a little tool that I use to figure out where the stops are, and it's worked great for years, that you can actually kind of predict this stuff. Again, I'm not your chartist. I'm your field guy. But anyways, I'm going to leave it like that, and again, I'm going to repeat, no stops go untouched in the S&P. I'll see you tomorrow.